All right, guys. Good morning. Welcome to today's brainstorming session. The topic for the session is when do you seek investment for your startup? Okay, so this is something that is very important and something that needs to be discussed. And a lot of people struggle with this idea that what do I do to secure funding for my startup? And there are mistakes to be made in this process. Sometimes you try to seek it too early. Sometimes you don't know how to work with the right investors. Sometimes you don't have sufficient funding, so you may have to stop. So there are like risks to everything. So you have to know when to seek funding. And we're basically just going to talk about this freely. It's an open discussion. So whoever has anything to share, you can share. And maybe start with an introduction. Can you guys quickly introduce? Maybe I'll go first, and then you guys can introduce yourself. So my name is Raghav. I'm based in Chennai, and I have a couple of startups. One is a non-profit startup, another is a for-profit startup. And I work in the technology space. We build software products. And my recent startup is only 5 months old. So we're at a very early stage. And we are working on 4 different software products. These are basically mobile applications that are consumer facing. So we basically will be able to download it on your app store, and you'll be able to, use it on your phone. So we are building these consumer-facing applications, and so that's a bit about me. The Startup Club is something that I started last year, and just to casually meet new people, and it's been a wonderful journey meeting a lot of cool people. So that's about it for me, guys. So hopefully you guys know at least where I'm coming from on things. So either of you can unmute and you can go ahead with your introduction.
Hey Raghav, this is Saravanan from Bangalore. Yeah.
Hi, Saravanan. Saravanan, we can't hear you. Can you? Are you speaking? Your audio is not coming through. Can anyone else hear Saravanan?
No, I don't hear.
Okay, so Bharathan, we were just going through introductions. Maybe one of you guys can introduce yourself while Saravanan is fixing his mic.
All right. So if English is fine, I'll introduce myself.
Yeah, sure. Go ahead. No,
That's fine. Yeah.
Yeah. All right. So myself, Bharathan, I'm a founder of Primates Development Private Limited from Chennai. We are into mainly digital transformation related products like Industry 4.0 focused. So we've been supporting companies like Nokia and all. So some of our products are related to indoor navigation, AI-based education industry products, and smart lockers for different industries like industrial purpose. And we also provide custom development solutions related to web or mobile application, all that.
Okay. Thanks, Bharathan.
Thank you.
Thanks for the introduction.
hello. Hey, everyone. I'm Venkatesh from Chennai. Am I audible, everyone?
Yes.
Yeah.
Yeah. My space is in pharmaceutical space. We have it's 2 years old. We have a consumer-facing OTC drug platform, and as well as a platform for trading pharmaceutical product, exporting pharmaceutical products for international markets, mainly African and Southeast Asian countries. Some of the problems with pharmaceuticals is other than the large big brands, sourcing good quality products has been tough. So what we do is we source them from GMP government regulated factories, and we export it to around 32 countries as of now. So that's the space I'm in. Great meeting you all.
Yeah, that's wonderful, Venkatesh. Thank you. Saravanan, can you try speaking now? Okay. Looks like we've lost him. Anyway, I think it's a good mix of like experiences all three of us have, and maybe we're all at different stages, right? So I was just wondering, like, do you guys tell us about your funding history? Like, have you had funding? What are your thoughts on the topic of the conversation, which is basically when do you start to seek funding for your startup?
I can go first, I think. All right. So, so far I haven't got into funding. So it's been bootstrapped completely, and I've been surviving from the projects that we do from the development for other companies. With that, I'm making it, and you know, it feels like it's the right time to go for funding, but still something holding us back. I'm thinking like, okay, from one of those projects, what we do, which is having very good potential to bring in some good amount of money to sustain all the research and everything, scale up whatever we're planning. Maybe it's coming near future. So until then, we can somehow manage with whatever we're making with other sources. So there is no need of giving out big chunk to or even give out control to any investors at this point is what I'm feeling personally. I might be wrong. I might be, jeopardizing my scaling up by thinking like this for a while, I think, but I don't know. That is the kind of state right now I'm in. I'm in a dilemma of whether to really seek investors or let's manage the situation. That's how I'm right now. I have attraction. No, we have customers. We have a constant flow of projects. We have good traction. Only thing is, I'm not sure whether I'm ready for the investor or not.
Thanks a lot for sharing that, Bharadhan. Yeah, I think that's a very good point you made about like the fear of investor control. I think that is something that is a realistic fear to have, because the moment you take money, it also comes with certain conditions, and you have to make sure that you have the right privileges as you move forward. And yeah, I mean, and also the other side of the problem is that if you manage to um, you know bootstrap your company and you're not seeking funding, maybe like you said, you're missing out on potential for scaling up that you could have had with the right
Yeah,
investor.
that I can face. I'm really experiencing that also simultaneously. I can see that, it could have been done better, or I could have leveraged more from this product if I had enough of a fuel to scale it up to
Yeah.
the required thing. So that's also there. That's what that fear is what holding us back.
Mhm.
We don't know what we're going to lose by letting someone in. And I don't know if we could make a right decision on finding the right investor. That's also there. Making a
Exactly.
decision on
Yeah.
an investor is
Because I
there,
think
but
what
we don't know whether the person we're going to choose as investor is it going to be right person for this.
yeah, it's actually a really fundamental problem to the ecosystem, because these relationships are built on trust, so it's really hard to identify somebody to trust in a short span
Short
of
span,
time.
yeah.
And you can't really know, right, like how this person is going to behave maybe 2 years down the line under different circumstances, because when
I have one
things are
point to
good,
share.
maybe they're but Mhm.
I'm sorry to interrupt. I have one point to
Yeah,
share in regards
go
to
ahead.
that. So because of this fear, what I did is I kind of
Mhm.
the way I interacted with them, the way I done a project for them, everything, I kind of made my clients who I've been having relationship for a year or two come up and offer me a kind of wanting to be on board in my company. They are actually offered me. Okay. Now
They
this
offered you or you asked for it?
I didn't ask for it.
Okay, they offered it. Okay.
So most of the people I met, they ask me why you don't want to go for the investors. Like, it's
Mhm.
it's needed, and you can do it, and we can come on board, easy handed. Like, like we can act as a, sorry, give me a moment.
Yeah. But in the meantime, like, what about others? Like, Anil, maybe you could introduce yourself. Anil, you're on mute. Would you like to introduce yourself? Okay, looks like he's not interested. Anyway, so I think that is a very interesting
Yeah,
problem.
but only thing is, like, they are interested. Like, in my case, the client that who's ready to come on board, like, this is a word they said. Okay, Bharat, we understand your potential, right? We would be, we don't want to act like an investor kind of thing, but we know what you're capable of doing. Like, you're also supporting us with our technologies things. Okay, we can come on board, and it can even leverage, you can leverage the kind of capitals we can bring in for your expansions, and we can continue our mutual relationship, is what they're saying. Like, it sounded more like something that I'm already doing with them instead of a very typical investor relationship. At least they're opening up to that. No, I haven't said openly yes
No,
that
see,
do that.
the thing is that in a situation like this, you as a founder, you have to protect your own rights first of all. Even
Right,
though, like, you have to make sure that your intellectual property is under your ownership, and also in terms of like rights, right? Like voting rights, like in
right,
case of decision making, if you have
right.
a board, then you need to make sure that you have control over those,
Correct.
because the decision the direction of the company, the direction of the product, and strategic decisions need to be made on your own authority.
Mm,
The moment you give that to others, then you it's not your product anymore,
absolutely.
and the investors will always act on the advisory of people in the industry, and they may have their own interests, and maybe they're poorly advised, or maybe they don't want to share your vision of like what the product should be. Then these are all situations where you will suffer that investment, even though it is helping you scale.
Maybe that is a fear that holding us back from, we waiting for that right moment. Like, let's say, okay, we grow a little more so that they will not have the dominance over us. Like that, we feeling like, okay,
you
let's
know
scale up by ourselves to little more revenue. Then probably they will not be able to,
no, I think
expect
okay,
that
so
domination.
this is what I'll approach with, like what I'll do is, like, what I'm doing right now is that I'm not going to seek funding unless my vision for my product requires it. First of all, the product is at the center of this. It's not the investor, it's not your interest, it is the
Yeah.
product.
Yeah.
So every product has a certain pathway to success. So
Correct.
you have to be clear on how you're going to shape this product to that success.
Right.
And you forget about everything else. You forget about what you need to achieve this and all this. So you just like figure out like what you want to do about the product, and which direction you're going to take it. And once you figure that out, you then like map out the resources required to make that happen. And you also need to like make sure that you're targeting a timeline that is reflecting market trends and all these things, because there are situations where if you launch a product at the right time, then you have a lot to gain rather than waiting for a couple of years or something. So in that situation, you need to have a right timeline for the product in your mind. And and once you decide all these factors, these are all the non-negotiable factors. Once you
Right.
decide all of these things, you look at your capital. Do you have sufficient capital to purchase those resources to make this happen in this timeline?
Right.
Right? If the answer is no, then that is the right time for funding. That is how I see it.
You're absolutely right. I mean, that is, if you take my case, for example, my product requires that, because so I see a market demand. Okay. I have even pre-orders. All right. But there is something called like the product affordability for the end customers. Okay. Now, to make my technology affordable for the end customers, to bring them to the expected range, I need to go for the mass production. Okay. That is where this investment is required. Either I have to take it from investor, I have to put my money. This is the situation. So the investment is needed, the capital is needed for sure, in order to really reach it to the market in the range that customers are happy to have. And if the customer is having demand for the product, it's all there. And only thing is, since we have some possibilities of, let's say taking some working capital loans, and with that, whatever already traction we have from that, whatever extra money we make, we are maybe assuming or, wishing that we can manage this capital that required from the sources that we have in pipeline. But there is also fear. What if it is delayed? It will happen, but if it is delayed, then we kind of miss that golden time where the customers are ready to have this product if we are delivering the product now in that cost that they're expecting.
Yeah, that's a very good point. I want to know what others think. So
Yeah,
this is
yeah,
a
sure.
brainstorming session, guys. Make sure that you're free to participate. It's basically an open discussion where we are exchanging ideas and thoughts and helping each other understand whatever you know. So don't feel shy. Please do speak up. And if you haven't introduced yourself, please do introduce yourself, and then you can share your thoughts on this.
Hello, people. Again, Venkatesh here. I've been listening to you both. No, I mean, I think when it comes to software services like you guys are in, I mean, the capital requirement is pretty much the input you're giving is your own service. So you're getting the product ready, and unlike this, our business is a bit more capital intensive. So we had to raise,
exactly.
Money from a small family office in Chennai.
Yes.
So we did raise a small money from them, and it's been good. The reality of raising money outside money is it makes you more makes you more answerable to the people. We have our accounting and audit sessions exactly like a public company does. Every 3 months we do our audits. We place it. We give it to all our employees and as well as our investors. So I mean, every single rupee we pull in or every single rupee we spend on anything, that's been accounted and audited, and that makes us more proper regulated, and it makes us more running the business a little more properly.
Yeah, it's kind of bringing a structure to the company.
Exactly. We did have audits and all that, but it was just an Excel sheets for our internal purposes. Now,
Right.
once you have an external investor, you need to present your account details every 3 months, and they need to see the status of what's happening, and they need to have a feedback and whether are we going in the right direction. It makes us more accountable.
Right.
So, Venkatesh, I have a couple of questions for you. When you say that you're talking positively about the investment, and first of all, with what Bardhan and I were talking about, you are right that software industry is not as capital intensive as like maybe hardware industry or like other kinds of like operations that require a large capital. Even for identifying traction, you need a lot of money. So it is a risky enterprise.
No. I'm not saying you're putting in your own time. That's not. I'm not bringing down. Even if a couple of friends or you 5 people, you're hiring a cost of talent in software industry is very high. So that I'm not saying.
No, I understand. I'm trying to say something else. So basically, what I'm saying is that despite the different industries requiring different kinds of capital and all this stuff, that stuff aside, you do have these like anxieties surrounding investor control and things like that. So what was your experience, and how did your journey take you through this?
No, the thing is, my investor, they've been in this industry before. So they had an understanding of how this industry works. And I gave out my plan, charted out the exact plan, what we are trying to do. We did a market analysis. which countries we are targeting, which are the products we are targeting, and we are not taking any massive bets in the very beginning. We are going one step at a time, and we made something realistic plan and presented to them. And they were in the industry before, so they understood this is something workable, and they did invest some money into this.
Okay, I see. So you didn't have those anxieties. You're feeling rather safe about this.
Not anxieties in the sense, getting about getting funding, or what would the investor do? If I'm diluting my ownership, and what anxieties am I?
No, that's what I'm talking about. Yeah. So like when you get an investor on board, you're probably going to also relinquish some amount of control. Executive control.
Of course, that's definite. Your equity. Your ownership is you're getting down.
Exactly. So did you have any anxieties surrounding that? Is what I'm asking.
No.
Was there
That's
any
because
conflicts in terms of operations or decisions into marketing, choosing the products? Was there any intervention?
no, they were totally just they were open to giving me advice or thing. Other than that, they didn't include in our day-to-day operations.
Nice.
What about like day-to-day operation? Fine, but what about like large strategic, decisions?
No,
Like
before
for example, if you
okay,
had to pivot.
I had to present my strategic decision before they could put money into our.
No, that's what I'm saying. Like, let's say that 6 months down the line, you realize that strategy was not ideal, and there is a different strategy that you want to adopt. Now, do you have to go and get approval from them, or do you just like go ahead and do it?
No, not get approval. We meet with them every 3 months.
Okay.
Again,
so you're just reporting to them. You're not like seeking permission.
And no, it's not seeking permission, but I do keep them in loop, and every time everything what's going on and what are we planning to do, and we definitely do keep in loop everything what we are planning to do. If we are planning to change the strategy or something, and we definitely give a conference call and make them included and get their 2 cents also. If this might work or things might go wrong, if they do have inputs, we take them seriously and work on it.
Yeah.
And then end of the day, we make the final call.
Yeah. I think that sounds like a very healthy dynamic. And I've just I've also heard stories of things going down. Because sometimes investors act in their own self-interest. They want to even if it means that you're basically pushing your company to the ground for short-term gains. They may want to do that. And we need to be careful about things like that. I've heard stories, like from other people who have gone through similar things. And so this relationship is like kind of like it's almost like a like a marriage or something. You have to choose the right person. Otherwise,
exactly. That's the tough part. Their intentions, and you look at a bigger PE firms or venture capital firms. Whether you choose a family office or venture capital firms, you need to make sure their priorities and your priorities, and how could they support on the overall picture, and make sure that the investors act more as a mentor and also support you in everything. If that's not the relationship, and they want to make a quick buck or something, and I don't think it's going to give you a lot of problems in the long run.
Yeah. So
what stage you were? Sorry, you can continue. Yeah, sorry.
No, I'm saying that basically, Venkatesh, you are basically in a point where you had no other option than to get funding. So as soon as you had the idea, you basically had to get funding. So this question is not relevant as relevant to you as some of the other questions, right?
No. We did initially. We didn't start off big. We started off small, and it did take traction. And then after a few, we wanted to grow some more. That's when we pitched, and we showed our prior success, and that's when they put their money in it. So,
can you remind me what exactly is the industry that you're in?
Pharmaceuticals,
Okay, pharmaceuticals. So you're developing medicine?
No. We get products from India, and we export it.
You're in the distribution.
Distribution, not in India. to
Mhm.
abroad, African countries, Sri Lanka, Southeast Asian countries. We
Got
get
it,
that
got it, got it.
from them. We make sure we procure our drugs from APIs from proper factories, not small, I mean, not the good ones, and then we export them in all the APIs we to the countries and depending on their orders.
Got it. Got it, got it, got it. Okay, I think we have a bunch of more few new people. So yeah, coming back to the topic of the discussion, I think Bharathan, you had something to say, right? Can you? Yeah, you can go ahead.
Yeah, he answered the question. I was going to ask in which stage he was seeking the getting the investor in. And one more question I have, like we could be generic to this topic. Like, let's say we have option of a debt or investor. Which one do you think be the good option?
I think it depends on like how quickly you will you if your confidence is high that you're going to succeed, how quickly are the returns going to come in? Because if you have debt, right, there is it's like a time bomb basically.
Right.
It gets to a point where it becomes unviable for you to get there. First of all,
Yeah.
so you will want to generate revenues before that happens. So I think it depends specific to your product. What is the revenue? Like arc. When will you start making the big money? And when can you finish off those things? So it's a big bet actually. I would say that in some sense it is maybe it's more riskier than getting an investor, because you are betting really yourself in there. And
Right.
I also have an open question for anybody who knows the answer. I know that there are like collateral free loans that
Right.
the government
Being
offers.
in a startup ecosystem, sometimes you get a collateral free working capitals with the
Yeah, so
nominal
I'm
interest
just
rates and
wondering,
things.
like, what happens if you don't you don't succeed? What if
Mm.
you cannot repay that loan? What happens to that?
That's either way, in terms of what we working towards that in terms of the product sense, what are we promising to the investor? It's not in the sense of making the investor believe. It's actually for us to have that, complete, what you call, putting everything into that product to make it success, right? Either we going for debt or going for the investor.
Mm-hmm.
That part is almost same, right? Either way. It is not
Yeah.
like we thinking that because of investor, we have some safer zone or something, we're gonna let the product any loose, right? We're gonna do everything in our power. Obviously, there is a consequences, like sometimes things cannot go in the direction that we expect. But
And to Mr. Bharathan's point, securing a debt, if you're a debt, when you're in a startup, is also quite difficult. I mean, the normal banks or even the debt funds, they want to look at least 2 years of your IT returns to give you a loan or debt of through debt. So securing debt in initial stages is actually tougher than getting a private investor or getting an investor on board.
very true. In many generic business models, it's a very difficult process to get the loan. Let's say if we are part of some innovation oriented, where through the government schemes, if we are getting some collateral free loans in the startup ecosystem, that's giving us some fuel for the initial process to get that good amount of traction to have the boat running.
That's true. That's true.
Yeah.
That's definitely.
I mean, as in, like, anyhow, for the the big scale up, you have to depend on some investors. But before that, if you want to give that, in order to hold your side strongly with the investors, if you want to have that initial lot of scaling up done from your side itself with the help of some loans like this, maybe it put us in a better position in front of investors. Or let's put the question this way, like, you expect to have the overall scale up to certain stage, and for that you want to attract some quality investors who is capable of doing some big numbers. But if you are in a too initial stage, and if you try to assess that investors, they might not respond to you, or you might not be able to convince them with your numbers, current numbers. In that case, what's going to happen? That is what I'm thinking. Like, in your case, how it happened, Mr. Venkatesh? Like, you got what you wanted, or is it like a series of like first step, little bit, then second cycle, third cycle, like that? How it was that investment journey?
Yeah, initially it was my money and my family money, a little bit of my friends and family, and it was that's how we started it rolling. And we tried getting debt funding. We couldn't get that. That's the reason we went on to get an
Understood.
investor. So initial investment was my money and our friend, pretty much our.
Got it. With your investor, it's like series of funding or just one time investment, then
As of now, we just have got a single paycheck from them,
okay.
and we've been doing okay since. We might go for a next round either from them or we would be. It depends, and as of now, in next 6 months period, I don't think we're required to raise funds additionally, right? As of how
Got
things are going.
Understood.
Yeah.
And I think there are a lot of seed funds and seed funding. You have a proper, when it comes to technology, if you have a great idea
Yeah.
and present it to the pitch test, there are seed fund, venture capitalists, small family offices also taking a look at things. But you
Yeah.
can't expect a huge paycheck or a big check from them, maybe a small amount, a small paycheck
Yeah,
initially.
for you to go two steps further.
There's another option if you're depending on your nature of your product, right? If you're having something that has the potential to completely be the next big thing, you can also seek out investments. You can also seek out something like a Y Combinator or
Yeah.
there are other programs like this where they give you like $500,000 or something like that, and for like 5% stake or 7% stake, something like that. So that is
what kind of program is that?
It's basically they are an investment fund, okay? Like Peter Thiel.
Okay.
Peter Thiel, he was actually the one who invested earliest in Facebook and Uber and all these other products. So these kinds of products, they which has the potential to be like a revolutionary product in the space. They take interest in, and they give you like $500,000, no questions asked. You can spend however you want it, and they'll just ask for 5 to 7% equity.
Okay.
And on what you do is you basically you can use that money to recruit, but also you have the network that the space like Y Combinator has. Y Combinator has amazing networks of mentors and advisors and engineers, scientists, or whoever, whatever technical people you need. There are people who can be your co-founder. So they actually also they have a matchmaking system where they match a co-founder with you, so that you can actually go there. It's like a so this is how it works. You have to apply for it. If you apply for it, you have for 6 months you have to go to the US. You have to go to California,
Okay.
and you will spend the time there, and it's all, I think it's all taken care of, and they give you $500,000 upfront. Okay. And then during this the several weeks that you're in there, you will basically go through their programs. So whatever they have, they'll have these kind of brainstorming sessions and discussions about the strategy, or identifying where you're stuck, or figuring out what the innovation has to be. So they identify products that have the potential to be something great and where they can help the most, and then they will onboard them and give them that money and that all that mentorship. And after that, you can go ahead and do your thing, implement whatever you've learned, and you use the money.
Nice.
And so, and again, and also in India, there is a program like this. There is an organization called Antler. I think it's a Finnish company or something. but they have like these kind of funds everywhere. So they have a center in Bangalore, and they're also having I think they're going to start a center in Mumbai as well. And they have similar programs where you apply, and if you get in, you have this like resident program where you have to go there and then train them, and they'll also give you like $500,000. I think it was similar. I think it's a very similar program to what Y Combinator has, and you can apply for this from India. So I think they have like seasonal programs every year, twice. I think they have this. I think I may be wrong. Maybe there's a different frequency, but yeah, this is another means for you to get funding if your product is something that appeals to them. And they have different metrics for this. Like they'll just like ask for like 1 minute video of you. You have to talk about your product for a minute. That's it. You should also, you guys, if you haven't seen this, you guys should check out like the Y Combinator sample videos, like interviews of past founders who've been selected.
Got it.
And yeah, you just have to convince them of your vision, and that's it.
Right.
You're not like showing your market project. There's no slideshow. You cannot show a slideshow. You just have to be yourself and speak from your heart. And you just have to like convince them that you know what you're doing, and you have sufficient experience, and you have the right teams, and you have some kind of a validation or proof that this is going to succeed, and you have the vision for it. So it's a very interesting application process. I think it's a very American way of doing things, and
right.
And you can also apply from India. It's not like it's only for Americans. If you apply, there have been many startups from India who got accepted. So this is also an option.
I mean, is it like any particular recommendation in what stage your startup should be in or something like that?
So they usually look for products that have gone a certain arc. Actually, they have a certain graph on the website where they talk about the arc of a startup. Okay. So you first you're doing something, and then you're testing it, and then you have a huge dip. The curve goes down, and then you are maybe like coming back up, and that is somewhere where they're interested in onboarding the people. You've had some experience, you've tried a few things, some things have not worked out, or some things have worked out, and you now know what kind of an expertise you require, or what kind of funding you require. I mean, what kind of strategy you want to take forward. So at that point, like they're receptive for all these other mentorship that they're able to provide. I'm just like guessing that's what the rationale is. But yeah, I think that graph is available somewhere on their blog or something.
Got it. What is the company name you said for India? The one they do
Antler India.
Angular.
ANTLER India. I think that recently their deadline was crossed. Maybe you can apply for a next batch if you're interested.
Okay.
Yeah.
Okay. Nice.
And,
very informative.
You look at okay. Sure.
Sorry, say that again, Venkatesh. We lost you.
No, I mean there are Startup India seed funds. The government of India itself do provide pre-seed funds. And it would be great if someone actually put out all the pre-seed seed funding venture capitals located in India. I think I'll try to get all the list of all the venture capital firms who do provide a pre-seed round and put it on the group if I could, and that would be useful.
See, the thing about this is that See, the pre-seed funding, right? You're looking at different numbers. I think there's some issue with your audio. But anyway, we got your point. The pre-seed capital in India is like very, very minuscule. Okay, and the amount of control, or rather, the amount of things that you can do with that money is like limited. We're talking about like for example, even if you get like managed something, and versus like what $500,000, it's like, I think it's like 25 crores, right? I'm not sure exactly, but that is a huge difference, and also you're not losing a lot for that money.
Exactly. Sure, but I get it.
I actually, they conduct every year the dance aid program from Startup DN. I'm one of the jury members in that dance aid. Last time it happened in 2 months back. It happened in our innovation center itself, and I was part of a jury member to evaluate around 30 startups. They were offering somewhere around 10 to 15 lakhs with the 5% equity. And it just, maybe the funding limit is different. They can give some initial push, but if it is technology related product, then there is a organization called DTP. They give up to 20 crores.
Okay. I think it
So
also depends on the industry that you're in. Sometimes it doesn't make sense to have that much money.
so when it comes to DTP, what they do is it can be any technology related to anything that they, and it's free to apply for them. What they will do is they'll evaluate it, and if your product is not suitable for them to pick, still they will give guidance and all that. And with their fund, it's like you don't have to pay back for 4 years. After 4 years, you can pay back with, I think, 4% interest or something. Overall, just with the 4% interest, you can pay it back. That's how they structure it. It's from central government, actually. I had a meeting with them
Okay.
couple of weeks back in our innovation center.
Okay.
That's
Which innovation center?
the Crescent one, the one where we are located.
Okay.
Crescent Innovation Center now. So
Yeah.
it's a government body, and they put in this term, like for initial 4 years, you don't have to pay back.
Okay.
Like that.
Yeah, by the way, I think I was wrong with the numbers. $500,000 is, I think, 4 crores or something. Not 25 crores. But yeah, I think there are a lot of options. I think maybe we should have like a separate session on just identifying the sources of funding. But I think we did. We had a session workshop like a few weeks ago, where we had somebody from the industry come in, and he was explaining what are the different sources of funding that you can avail as a startup. And there's a recording of that in our YouTube channel. You can check it out after this. And yeah, we also have Santosh in the call. Santosh, would you like to introduce yourself? Tell us what your experience has been and what your thoughts are.
Yeah, hi all. I'm actually not into a startup club actively. I'm actually a full-time employee. I worked on an idea some years ago very actively, but did not got funded and ended up leaving the idea. Now it became stale, so I'm just learning.
Okay, got it. Yeah, but actually, there is, there was an investor that works with us in the startup club, and I had asked him to join this call, but apparently he has a different call from 11 to 12. And I was thinking that maybe if we can stay back after 12, right? Maybe for a few more minutes. Maybe if he joins, he would have a lot of answers to our questions actually, because
That
he's coming in.
Now
Yeah,
hear back from them.
yeah. So I'll let him know that we'd be interested in if you can join. Give me 1 second. Yeah, I told him. So if he joins, he'll have a lot of thoughts on this. I think even for something like the investor control, right? I think from his side, he may be like offering us a solution on that, because it is something that everybody has an anxiety about. But the thing is that there are people like him who's also a founder. Okay, he's a founder, and he knows this side of the story. So if he is an investor, what is his thought process, and how does he approach this? And what does a regular startup have to expect in the Indian market of investors? These are all things that we can learn from him. So I would invite all of you guys to stay back after 12 to see if he joins up. And in the meantime, we can just continue the discussion. I think I don't think we've arrived at like any kind of a conclusion regarding like what is there if there's a formula for figuring out when you should get
Right.
investment.
Right.
Because I think it is case by case. You have to like evaluate it, and it is like it's almost like for example, if nations were going to war, they're strategizing their strategy for war because there is a lot at stake, right? And you need to have like a good war room plan, like a blueprint that to as to like how you're going to approach this whole thing.
Right.
And yeah, so even the decision of when is one of those things. It's not even the main thing. There are other things that are questions need to be answered, but it's one of the main things that we need to figure out in a strategic way. So I think it does. I don't think it is possible to have a formula as such. Maybe we'll just have like it takes wisdom, right? Like you may have failures in the earlier decision making that you may have done, but down the line maybe you'll learn and you'll just change things. Which is why I think that it's for an entrepreneur, the question of when is actually that you have to start as early as possible in experimenting and making these decisions so that like you know when on your own,
Correct.
given your circumstances.
And even if we going for it, we have different terms, right? What kind of investment things? Then what about the terms? Sometimes they for some of the methods as suitable for more suitable or safe for startups, whether it's safe for founders, safe for investors. What about that?
See, actually, even before we get to that, right? Have you guys noticed that there's been a news of so many startups that raise like huge amounts of funding, and then they start like firing a whole bunch of people, and then the product just collapses.
Right.
So how many times have we seen this? Like we've seen, I don't know, like I think there was this company called Blue Learn or something. I think it's called Blue Learn, right? But it was basically a community. It's basically built by students, and it was a community of like other students. I think doing internships and things like that. I think that's what they do, and also they have some learning resources and all that. And not even like a month after somebody was like coming and praising about like this company, it basically raised a series of like it raised a huge amount of funding, and they ended up like returning 70% of their investment back to the investors because they decided to shut down because they realized that they cannot scale. So, and then there have been other stories. It's just like one example, and I think there are instances where the other extreme side of the fear is also true, which is that um, is it possible for you to get like a large amount of funding too soon? Because if that happens, then again your decision making suffers and you do collapse.
Right.
So that is also a strategic concern that you have to have when you're deciding when to get the investment. My personal approach has been that, first of all, especially because I can say this because I'm in the software space, the capital is not too high. Like honestly, we haven't even spent anything except for my own salary and things like basic infrastructure. And it's not a lot of money, to be honest. It's like less than 50,000 for the entire infrastructure, and my salary is like a certain X amount per month. But that's the only thing that we have. Like the rest of it is like I'm managing with people who are happy to volunteer and learn from the process, because I do have experience. So basically what I'm investing aside from my time is my experience as a software developer, and I know how product development works end to end. I can do it on my own if I wanted, but I'm managing to teach other people and also like get them onboarded. Right now, I'm not even touching the code. And so this is a luxury that I can have because I'm in the software space. And for me, my strategy is clear. I'm going to just focus on building the products on my own, and then figuring out the traction as it is, as a bootstrap product. And once it gets to a point where we are aiming really big, and there is no way to sort of like generate enough revenue out of the products to fund that vision, that's when I'm going to seek out funding. At that point, I'm not going to have to do it too much to get the investors' attention, because they would see it. They would come to me if the product is successful enough. So I do feel like this is one of the big reasons why I chose software space to get into, first of all, because the potential for problem solving is really high in here. If you manage to have the right kind of apps, you can actually solve a lot of problems, and it is also like very, very less capital intensive. So, but yeah, but obviously the other industries actually matter a lot. I'm always happy when I hear product companies coming out of India, because they're doing something that does take a lot more effort, and not effort as such, but like a lot more capital intensive approaches, and you have to also source the right vendors and all these things. There's a lot of chance involved in that.
There's
So
also this thing, if you notice this
hey,
innovation.
Amiya is here. Okay.
Hi guys.
Hi.
Hi, Amiya.
Hello.
So
Sorry, I missed a lot of it, but I had another
no worries,
meeting.
no worries. Maybe Amiya, you could quickly introduce yourself to the others. They don't know you, I think.
Okay, sure. So my name is Amia, about 15 years of experience doing various things. I've been a consultant, I've been a product manager, I've been an entrepreneur, and I'm also a startup mentor with Vadvani Foundation and NASCOM. And right now I'm a partner with a VC firm called Ayurtha Capital. So yeah, that's what I do. That's the quick intro.
Yeah. So I'll quickly summarize some of the things that we wanted to ask you. Okay, so we were talking about the whole discussion is about when to seek investment for your startup, and what we were talking about was because as a founder, you have certain anxiety surrounding investor control, and you not having proper control over the trajectory of your product, and also there is also prospect of getting too much funding too soon. And we've seen these cases happen, right? Companies collapsing after they receive a huge round of funding because they just got it too soon. And also there is also a prospect of if you have a prospect for scaling up and you're not choosing to get funding, you are also losing an opportunity. So there are various risks to deciding when to get investment. And primarily the concern is when, and also tell us about your side of the story about the investor control anxiety.
Okay, so if I understand correctly, the trajectory that we are taking is, or we're talking about right now, is investor control and what happens exactly, right?
That is one thing. The second thing is when do you seek investment in your startup journey, right? At what point do you seek investment?
Okay, so let me take it from the beginning.
Okay.
And that is, let's just say you are a startup, you haven't sought any funding yet, and what happens, or what should you consider, right? First steps first, when you're building a startup, don't think about investment. That is the first thing. What you need to figure out is a business first. Any investor who's going to look at your startup, the first thing they are going to see is the business. And if they don't see the business the same way that you do, they are not going to be interested. Okay. Now, if they're not interested, but they see a very long short potential, that's when the kind of problems that you are talking about comes into the picture, that they want to minimize their risk. They might want a certain stake. Okay. But in a typical use case, when you're looking at a business, most investors, and I'm saying most, not all, because there might be some out there who might have some preferences, but most investors, they want to work in favor of the startup. If the startup doesn't go, see, understand one thing very, very clearly. What is an investor? When we talk about VCs, what is a VC essentially? VCs don't have their own money put into a startup. As an investor, I don't put my money into a startup. I raise that money just like a startup from somewhere else. Right? And these are very high net worth individuals, people who have got 1,000 CR, 2,000 CR, 10,000 CR kind of money lying with them, and they want to deploy it someplace. That's where I raise this money from. And then I go ahead and deploy that into smaller chunks into multiple startups. Okay. So just like a startup, even a VC needs to show to these guys that we are able to generate revenue and we are able to generate ROI on the investment that we have made. Okay. So with that construct in mind, no VC will be able to generate returns if the startup is not doing well. And if every VC understand that founders need to be motivated to be able to generate these kind of exponential returns that could help them amplify their portfolio. Okay.
Right.
So when we think about all of these problems, the control piece of it, okay, let me take a step back. So first step, don't think about investment. Try and build a business first. Once you build a business, people will come to you. Second thing, the time to raise capital. Let's just say you have just started your operations. You don't have enough traction. Let's just take a milestone called a PMF, product market fit. Okay. You can define product market fit for yourself, but when you have a conversation with a VC, they have a certain understanding. You are seeing your business, you are not actively monitoring other businesses. But as a VC in your same space, I will have 5 companies that I am seeing as well and their traction as well. So when I'm looking at all of the entire spectrum, at least what is exposed to me and my immediate network, because VCs talk, we talk to each other as well. So when I'm looking at the entire spectrum, I might have 5 to 10 companies within the same space that you are in. And trust me, unless and until you have something very, very unique, and not just very unique, very, very unique, there is someone else who is doing the same thing or solving the same problem, maybe use a different method. But take it for granted that there are 5 more people solving the same problem. So when you define a product market fit for yourself, that is a milestone that you should try and achieve by yourself. Should. Maybe you have a very high capital intensive business. That's when you go and ask investors. So that's step 1. If you have that kind of requirement that even to achieve a product market fit, that's the most difficult time to raise funds. You need to convince people on an idea, which is probably the most difficult thing to do. But if you get to a product market fit and you think that, okay, now I have sustained the business, I am generating revenue, I'm able to do, let's just say that my MRR stands at 10 lakh rupees and I need X amount to make this 10 lakh MRR into a 1 CR MRR. That's when you start to think about raising fund. And when you have to think about raising fund or even your startup, it's a combination of 2 variables. 1, unit economics. How's your unit economics faring? And second, what is it that you're willing to give for it? And also you have to have a perspective of the amount that you're raising, how long is it going to last? So typically when you start raising an investment, it lasts for about 18 to 24 months. That's how long you should prepare for. Doesn't have to be, it can also be 6 months. It can also be 1 year. If you see yourself being profitable in 6 months, then you raise for 6 months. But then 6 months doesn't give you a very long runway, right? So these are different considerations in terms of when should you look to raise the capital, how much, because the amount is going to dictate how much of an equity are you going to give to an investor in the first place. The second thing is when we talk about investors and investing amount, there are different instruments. You can have a CCPS, you can have a CCD, you can have a SAFE, various instruments, depending, equity, debt, multiple instruments are out there. So you have to understand that all of these instruments, they have got a certain terms and conditions. What no investor wants is to lose money. So they will always want some preferential rights. But those preferential rights between you and the investor, you have to sit down and negotiate and try and figure out that, is it going to hamper the company in some way? Some investors can come on board and say that I want a board seat. So you have to figure out, that's where as a founder, you have to take a call whether this particular investor is interested in the business, interested in you, and what kind of value they are going to add. And only then, so it's not just about a product market fit. It's not just about a founder market fit. It's also about a founder investor fit. Not every investor is going to be good for your business. So you have to have that kind of understanding in the first place, right? But prima facie, most investors, they actually want the startups to be successful. That's how they will generate returns. That's how they will give money back to the people who have invested in them.
Got it. I mean, I understand your point about like the investors sharing the interest. I mean, obviously they're there because they mean well for you. But in a space where like maybe like your investor has a certain experience in the industry your product is in, and they're coming in with like let's say an obligatory, I guess like you said, like the board membership or whatever, they have rights, and then you have a, let's say, even though you're both wanting the company to succeed, you have different visions for how to approach it, and maybe like you're willing to take a risk that the founder is unwilling to, the investor is unwilling to back up. So what
Sure.
happens in that case?
That depends on how your board formation is and what sort of votes are there. Let's just say that you're 4 founders, you have 1 investor who has got a board seat, and you have got 2 more investors who are board observers. Okay, they're observers, they don't have a vote. So in this particular setup, there is no problem. But let's just say that you are 2 founders, you have got 2 board seats, you have got 3 more investors who have got three board seats and 3 votes. They can overpower your decision.
Right.
So it's a combination of what's there that will eventually define how a particular decision gets approved or rejected. And same example, let's just say you are 2 founders and there are 3 more investors who have got a board seat, but then 2 of these investors are pro you, they are more aligned with you. Then also it works, right? So it's a very democratic, it's a parliamentary setup, right? Everybody has a vote. Eventually, whatever decision that needs a board approval, it will get passed on to the board. The board will eventually sit down and make a decision.
And the terms and conditions of this whole setup and how things happen, like for example, the termination clause of things or whatever, these are all like custom defined by you during the day.
Okay. Yes, exactly. So all of this is negotiation. You can have a CCPS where there are some preferences, preferential rights and board seats and whatnot. But at the end of the day, as a startup founder, it's your decision. You can turn around and say that I don't want to give you that. But then the risk that you're carrying is they can pull out the money. So if you're willing to take that risk, then go ahead. And I recommend every one of my portfolio companies, every founder that I talk to be in that position. The only way to be in that position is to have a very solid business behind you.
Exactly. Yeah.
If you are desperate in any sense, if I can sense any desperation in you, I will crack you open.
Because that is in your best interest.
Yes. I see, at the end of the day, it's not about the equity only, right? It's also about shaping. And think about it this way. I am not thinking about just this one company, right? I have an entire portfolio of companies. I want to create an ecosystem for myself as well, where if I have 5 companies that I've invested in, they should all be customers to each other's, partners to each other's, and collaborate with each other. That is the best outcome that is possible, because now I'm not just worried about one company, but together I can enable all of these 5 companies to grow.
Yeah.
So while we do think of in a way that it's in my best interest, but my best interest does not get served until my portfolio grows. And a startup is just a part of the portfolio. If the startup is going against the best interest of the portfolio, then I would want to take over. But if the startup is aligned with the portfolio, then I'm fine.
Yeah. Yeah, it is kind of like a war room. We have to like decide your strategy, and then it's like a chess. It's like a game of chess.
It is.
Yeah.
Okay. But then you have to have these conversations with your investors. And these are honest conversations. No investor is going to come back and lie to you, because they know that if they're not aligned right now, then there's no way that in future they will be aligned. Right? And putting money in you is a waste of that money. I would much rather put that money in someplace else.
Exactly. Yeah.
Right. So, but again, if you're desperate, then you are desperate. I mean, you have to, there will be a trade-off someplace.
Okay. And in terms of the other question, where we were talking about the when to get investment, and I think you partly answered that when you said like when you have a solid business and you're starting to attract investors' attention.
See, that's the best place to be in. Sorry, finish your question, please.
No, I just wanted you to elaborate on that. Like, what is your definition of like having a solid business, and how do you proceed from there?
Clear line of sight. One, let's just say you're pre-revenue, clear line of sight to revenue. Second would be a clear line of sight to break even or EBITDA positivity. These are clear indications that the business is growing. Then you can have some of the other metrics in terms of what's your monthly recurring revenue, say on a month-to-month basis or a quarter-to-quarter basis. and what rate are you growing. So if you're
Okay.
flat, let's just say that you made 5 sales this month, 10 sales the next month, 15 sales the month after, but then you haven't reached a critical mass, even though you are growing, right? It doesn't really mean anything, because 5 sales, if it amounts to 5,000 rupees, it means nothing.
Yeah.
So you have to look at the kind of investor that you're, and when I say investor, investors are of different categories altogether. There are angel investors, there are micro VCs, there are institutional VCs, there are Ps, there are LPs, there are family offices. So there is an entire spectrum. Not everybody is going to be interested in you at every stage.
Right.
You have to figure out what kind of investor do you want to target, at what stage, what is it that you can commit, what is it that you can show. If you are at a level where you are making, say, 1 lakh rupees a month, and then next month you make, say, 1,20,000, then the next month you make 1,50,000, angel investor is your best category. Maybe even some micro VCs, right? But then the higher up you move, angel investors are not going to be of any use. You have to go for institutional money, you have to go for PEs, you have to go for family offices and such.
What is PE?
Private equity.
Okay.
Same, think of it as similar to VCs, but they operate at a different level.
What level?
Series B, C onwards.
Okay. Okay.
Yeah.
Different stages of, okay. And also, I think some of you guys, I think you answered all of my questions. There are others who all had their own kind of like concerns. Maybe you guys can ask your questions to Amia.
Please go ahead.
Hi, Mr. Amaya.
Hello.
Myself, Bharathan, I'm a founder of Primates Development Private Limited. My startup currently part of Crescent Innovation Center, Chennai. So my space now is like I'm targeting the problems related to Industry 4.0, where indoor navigations, asset tracking related issues. For that, I'm developing a product. Okay. So I'm trying to make the product more suitable to the problem that currently facing compared to the other products that exist in the market. Now, my company I started 2021. Now I've been completely bootstrapped, never got funds so far from anyone. But in order to survive, in order to fund my research and everything, we've been doing developments for different companies. One of the blue chip companies also there. We supporting different companies with the different solutions that's related to the technology. We are working on our product as well. Now, let's say if I'm going to the investor, like, is it going to be always that one product that need to be in the list? Or let's say in order to survive, in order to make the company run until we reach some milestone, the different products we work together for other companies and our company all together, is that considered as something more cluttered and unclear to investors? Or as long as the business is happening, as long as I'm surviving with the business and having fun to research to reach the point, it's okay?
Just a small note. I was asking more questions regarding the topic that we have at hand. I wanted to make sure that we're having the discussion on the same topic, but I'll let Amir respond to this question.
Sure. So let me answer this question for Bharatan. Okay.
Yeah.
Let's take an example. Okay. Let's just put you in the investor shoes. Okay.
Right.
Now, let's say that you want to raise, say, 5 CR. Okay.
Okay.
Now, as an investor, think and tell me that the product that you are making, okay, that is the product that you're raising the money for, right?
Yes.
Everything else apart from that particular product is just towards your survivability. It may add some overlapping value to your core product. But then as an investor, what sort of questions will you have in your mind when you talk about investing that kind of capital into a certain company? What kind of questions will you have?
Whether that product have market, whether that product have pre-orders, POs kind of thing you have that, okay, the product is needed over there, but you need this capital to make it in the mass production to meet that cost that's required to deliver this kind of promising on the product that we're developing to be sold.
Right, exactly. Now, let's look at your question now. So do you think that if you present this picture, are you able to answer that this product will be able to attend to any of the questions that you asked as an investor?
In my case, it's kind of related to that, as in
So
we
see, it's when, and again, going back to my original point, right?
yes,
I'm not just looking at your companies. You mentioned about
yeah,
asset tracking
mentioning
and
yeah,
asset tracking and all of those things, right?
right,
I can tell you at least 5 companies who are doing the same thing.
correct.
So I'm not just looking at you.
Hmm.
I also know of companies who are doing this exercise, who are revenue generating. Why not put money there?
Hmm.
So it's never absolute. You can look at it as a founder. You can have that vision and look at the absolutes. But as an investor, I'm never looking at an absolute thing. I'm always looking at a comparative market. I'm always trying to figure out that within the same space, who's doing better. Because at the end of the day, I don't want to create a conflicting portfolio. I can't invest in an Ola and then tomorrow turn around and say that I want to invest in Rapido as well. That's a conflict of interest.
Correct.
And that's a that limits me from diversification of my portfolio as well. Right. So I don't want to put my eggs in 2 companies within the same space. So I have to be very selective about it. It's not an easy decision for an investor as well. So if you can't answer, if you have got a roundabout answer, very pinpoint, very focused, very high growth answer, and I'm not just saying high growth, focused, very high growth, very high focused, then you will lose my interest.
Got it.
Right. So at the end of the day, when you, irrespective of what you are doing for survivability, that is survivability. And this is the word that you have used.
Yeah.
So survivability is not about the product. Survivability is about the company. But will this product itself, by itself, have that kind of adoption, retention, and market share in time to come or not? That is the question that we are trying to answer when we are in front of an investor.
Right.
So if you can't answer and show that, yes, this product, forget about everything else, this product is what is going to crack this industry open, you've lost me.
Right.
Okay.
I get it.
Yeah. So that's the answer to your question, unless you have a follow-up.
Got it. I got it.
Okay.
Thank you. Thank you.
Venkatesh, Santosh, you guys have any questions?
No, for me.
Okay.
I think Venkatesh, you had some other concerns, right? Venkatesh, you're on mute.
Hello. Hello, my great
Hi.
getting your opinions. It was, and you were talking about your ecosystem, your portfolio ecosystem. So, I mean, does it, uh, uh, is it okay for me to go approach a fund which has a healthcare or just investments in a sector which I'm part of, or could I go approach a sector agnostic fund, which would be a better proposition for me and as well as a fund investing in me?
Okay. So
I have a startup in healthcare and pharmaceutical space.
okay.
So does it make meaning for me to go approach a fund which does exclusively invest in these sectors, or could I go up get a funding from a sector agnostic fund which invests in various sectors?
Yeah. So see, irrespective of the sector, there are 2 options to go to and seek investment in. You can go for someone who is sector specific, or you can go for a sector agnostic fund. These are the only 2 options that are available to you, right? Sector specific guys, they are more picky, because think about it this way. When I talk about my portfolio, right? And again, it's all about understanding a VC. So if I have my portfolio as a sector agnostic fund, my choices are huge, right? So, and I have a much bigger fund available to me as well.
Okay. Okay.
Right? But I remember when I spoke about that the VCs have to go raise funds as well.
Yeah.
So every specific sector has got a certain requirement. Meaning tomorrow, if I want to go and raise a fund I will have to go and raise a fund in a health tech sector. Okay. I have, as an investor, I need to prepare my own thesis. Sorry, just give me 1 minute now. I'm probably getting a call. Okay, sorry about that. So what I was saying was, so as a VC, I will also need to go and raise that money from somewhere. So I have to have some narrative, some thesis, some story, what kind of startups that I want to invest in and all of those things, right? So that makes me very tunnel visioned, not in a bad way, but in a positive way, that these are the kind of startups that I will invest in. That also means that your problem statement, your impact, and your outcome, they need to be exponentially stronger for me to invest in you. Because now I'm an expert in this particular field. And I have that vision that across the entire length and breadth and the entire spectrum of this particular sector, what is happening. So you have to convince someone. Think about it this way. You talk to an ISRO scientist about space technology, then you need to tell him something that he doesn't know.
Okay.
Only then you can get the money out of that person, right? Not to say that the sector agnostic guys are not that smart, right? But these are the guys who are focused, very, very focused. You really need to tell them that if I take this product into outer space, this is how it is going to react and is going to solve in that particular way. And that is what is you are going to save or generate, right? Sector agnostic. They have got one person doing this particular thing into a particular sector and analyst essentially, right? So, but they have got a much bigger pool. It's like, think about it this way. The government of India, it says that space technology companies, they can, or let's say, I'm reserving, say, 5% of the GDP for space, right? Or 10% of the GDP for agriculture, right? That 10% is your dedicated fund, sector-specific fund. But the sector agnostic fund is your government of India. They have the they have the power to decide how much of an investment they want to make into what sector. But everybody has their own thesis. My recommendation, approach everybody. Don't shy away. But the storytelling, that really needs to be very strong when you're talking to someone who's specifically into a particular sector. Not to say that a very strong storytelling is going to hurt in the sector agnostic as well. They might be willing to give you a chance, the foot in the door piece of it, right? Relatively easier with the sector agnostic, but relatively difficult unless and until you have a very strong story with the sector specific.
A follow-up on that, you spoke about the ecosystem, ecosystem of the portfolio companies you're investing on. Question I had was, if it was a sector-specific fund, maybe that ecosystem could help beyond the money. I could get mentorship from the person because they definitely have a enormous insight about how the entire ecosystem works, and their portfolio companies could also work along with us. That ecosystem, I could access that ecosystem also.
Yes.
So I mean,
absolutely.
that how does it? I mean, beyond the money part.
Yeah. So I mean, see, at the end of the day, most investors are happy to connect you to different people. They don't mind that as much.
Their portfolio company people.
Yeah. So if for example, I was talking to someone, another quite a major investor, maybe about a week ago or so, couple of weeks ago maybe, and I had a portfolio company who's into a certain space. Their requirement was too small. They weren't interested in investing, but they said that I have a portfolio company who can be a customer for these guys.
Okay.
So all of these kind of collaborations, mentorship, sales collaborations, R&D collaborations, partnerships to enter into a certain market. All of these options are certainly there. So don't think investors in a very one unidirectional way to say that it's all only about money. These are the guys who know probably the wealthiest and most influential people in the world. So they can open doors for you in forms and manners that you haven't thought even possible.
Okay, great. Thank you.
But
Thank
yeah,
you
I
for
mean, you have to sort of get their interest first. So if they're not interested,
I mean,
then
of
they're not
course,
going to entertain you.
Yeah, I mean, we have to have a business or a product that is that's definitely
That fits well for them. And again, when I say fits well for them, that doesn't mean that your product is bad, right? What works for one investor might not work for another investor, because they might have some conflict of interest. They might have some other positions that they've taken because of which they can't entertain. Nobody's going to come and tell you that, this is why this is. But then you have to keep trying. That's the only way. Unless you can get warm references, then someone might be willing to lend you an ear.
And Amir, the one more thing that we were discussing earlier was regarding, like, for example, I was telling them about Y Combinator and Antler and all these, sources of funding. And, for me, right, like when I've talked to investors around here, and then when I compare the deal that they are making versus the deal that Y Combinator or Antler is making, it's just a huge stark difference. And obviously, it is preferential to be at a Y Combinator or something like that. I mean, I want to get your thoughts on this. Like, what do you think about somebody who's looking at it as a founder and they found it attractive? What is your realistic advice to them?
Okay, I didn't understand the question. I understood there is a comparative angle, but I'm not sure comparison between what and about what.
Y Combinator and institutions like Y Combinator and Antler versus I think Indian-based investors.
Let's just say an India Angel Network.
Yes.
Okay, and what are we comparing them on?
In terms of how good the deal is, in terms of like, how much equity are they asking for, how much value of money that they're investing.
So how are you defining a deal?
Let's say that, for example, if you get accepted into Y Combinator, they invest a certain fixed amount and then for a fixed, equity. And that's like at $500,000 versus like 7% equity or something like that. Versus if you compare that with Indian investors that I've heard from, they have very strict conditions on which they're happy to invest, like 2 crores or 3 crores, something like that. And the percentage of equity they're asking is like much higher.
Okay. So, but that's an incomplete picture.
Okay.
The reason there are two top reasons that I say that. I don't see how it's fair to compare unless too many variables, actually, as a matter of fact. Let me take a step back and put things in perspective and context the way I see it. Okay. You're an Indian startup. Okay. Most probably you're solving a problem for the Indian diaspora.
Yeah.
Now, a lot of Y Combinator and other platforms that are out there, the knowledge that you want out of them, right? It's already available out there. But are you experienced enough? Do you have prior exposure to understand the essence of that knowledge? That is question one. Question two, they might still be able to guide you and tell you and get you principles right in terms of how to build a business. What should you focus on? What should you not focus on? What should you do? What should you not do, etc., etc. But the most important fundamental piece that I've ever heard coming out of a Y Combinator is do things that are not scalable. And that is a definition and interpretation of it is what you have to put in practice for yourself. No Michael or Dalton or whoever is going to sit there, or a Sam Altman can sit there and tell you that you have to do this. This is something that you have to come up by yourself. You have to figure out what are those non-scalable items. What does that even mean? Do scalable things to grow, right? So you have to have a certain kind of understanding before you can even grasp what it really means. And this is one of those things that I've seen extensively, that no matter what gyan comes your way, if the vessel is not ready, you're not even going to understand what I'm talking about. That's something that I've struggled with a lot. So I don't see a comparison in the first place. Culturally, we are very different. The consumption capability of a startup for the capital and the kind of penetration that it's a very money comparison, money and equity comparison. Sure, Y Combinator will give you 500K, which is what, 4 CR for a 7% equity, right? But then if you have built a solid business, I can guarantee you that in India, I can get you 10 CR for 1%. But then that definition of solid is my definition of solid, not your definition of solid. So money and equity are very, very relative. Can you understand what is going on? That is the entire equation here. Startup is not about just the product or just the business. It's your understanding. It's the founder's understanding. As a founder, how astute you are. How much can you adapt, grow, learn, think, outsmart? That's what this entire game is all about.
Yeah. Okay. Yeah, it's good to know the ecosystem of the investor ecosystem from you, actually, because I don't have a lot of like first-hand knowledge of like how extensive the whole ecosystem is, who the players are, or like what is the scope.
Sure.
It's really hard to know that.
It's all, see, what founders, and I've been on your side as well, so that's why I'm here, that I want all founders to know as well all of these things, right? I've been a founder myself. I've been on the other side. I understand what goes on. But what I've also come to realize that India as a geography is very, very different. If you're solving India-focused problems, someone sitting in Y Combinator is not going to help you as much as someone sitting in India. They can help you with the business basic principles, but then the limitation is not there on their end, because that information is literally already available on YouTube.
Yeah.
Can you understand? Can you make sense of what is going on? As founders, we love what we are doing, but then the end, having that perspective to have an out-of-body experience and then look at things. That's what makes the difference for the best of the founders. Be very critical. I am not a very, feel good kind of person. I don't want to make anybody feel good, but I have your best interest at heart. I will tell you as I see it.
Yeah,
Right?
that's good. That's exactly why we love having you around to have these discussions. Yeah.
But not everybody can understand that. Not everybody can adapt to it. Not everybody can learn according to it. Not everybody can get into a position where they don't take offense to it. Right. So
Yeah,
I've had so many people have been very, very offended by what I have to say. But then you have to understand that I am one person. There is absolutely no way possible for me to be right every time. But then if someone is saying that, criticizing you, take it into account, figure out what is it that they are talking about, ask as many clarifying questions as possible, understand the root cause of where they are coming from, then go brood over it, put it in your system, then try and figure out that is it really happening or was it just a perception? If it was a perception, what is the irrefutable proof against that perception? Have that conversation. It's a conversation. It's not an argument. And then if you figure out that there is actually something, then go fix it and then come back.
Yeah. Yeah.
So yeah, I mean, that's the entire process. And again, so from a comparative point of view, my answer is that I don't see the comparison. I don't see it as applicable.
I think you answered the question that I had, because I think my exposure to the Indian investor ecosystem is like very limited. I don't know what's possible. That was my blind spot. And I think you made clear that it's possible.
US system has been there for what, 3, 4, 5 decades, even much before that, right? They have been there for like 5 decades. We have just started, haven't already even completed maybe like 2 decades. So we have made mistakes a lot. We have tried to follow the Western model and whatnot. But over a period of time, everything consolidates, everything optimizes. Now the market that I'm seeing, especially in the Indian ecosystem, is Indian VC ecosystem. It's a very different market from what I saw 5 years ago. So it's moving more towards maturity. It is getting mature. People are looking at the right things. People are betting on the right things. Sure, there are outliers. There is no doubt about it. But then when I say outliers, exceptions, some investments that don't make any sense at all, but you'll see them happening. All of these things happen. But at a broader level, the market is moving, and it's all about market forces. Where's the market moving? The market is moving in a direction towards maturity, which is a good thing for the entire ecosystem. Are we mature? No, far from it, but we are getting there.
Yeah. Okay.
Yeah.
I think we've had a really wonderful discussion. I think we can, we've already past 30 minutes of the session, but we've had a really useful session. Thanks to Amiya for the input as well.
Sure.
Okay, I think we can close it here. Yeah.
Thank you so
Sorry,
much,
Ami.
Mr. for your insights.
Sure,
Very
sure.
helpful.
My pleasure. Okay,
All
guys.
right.
Thank you so much. If
Thank
you
you
guys
so
need
much.
anything, let me know. Happy to help.
Yeah. Thank you so
Okay.
much, Amiya. Bye.
Thank you. Bye,
Bye,
guys.
everyone.
Thank you, Raghav. Thank you, Mr. Venkatesh and Santosh.
Yeah.
Thank you. Bye.
Thank you. Thank you.
Bye.